Hey everybody, welcome back to Chip Stock Investor. We're talking about everyone's favorite company, NVIDIA.
But more specifically, we're going to talk about some companies that could be big beneficiaries of something NVIDIA is working on in 2026 with initial ramp up in 2027, high voltage data center architecture. Perhaps you've heard of it already.
One of the benefits of being a semi-insider is you get discussions and data surrounding relationships like this with NVIDIA and their partners, developing these high voltage data centers, breaking down the supply chain and understanding all of the components and pieces that fit into it.
And the way we have it built is if you simply just aren't sure which business you would like to bet on within a particular theme, you can actually find entire groups of companies and create your own little mini ETF, if you will, for your own personal portfolio. You can see some visuals of how that looks here from our research platform. Check it out. Semiconductor Insider over on chipstockinvestor.com. You also get access to our community of like-minded long-term investors too. Kind of a good value.
We're talking about an announcement that NVIDIA made in October of 2025, talking about what's going to happen in probably 2026, 2027 as power needs grow with AI data centers. So we'll talk about some of the collaborations, some of the partners that NVIDIA has made in this endeavor, and break those down for you a little bit.
The high voltage data center, or HVDC, addressing the rising power needs for these GPU and also increasingly custom silicon chips powering AI processes in data centers. This was the revamped list that NVIDIA put out in October of their partners. We're going to focus on the actual silicon providers. I think a lot of the power system and data center power system companies get a lot of attention, and that's fine. Generally speaking, a lot of those companies offer very similar services, but I think we've already provided with all of you where we're focused on that. GE Vernova was our big pick from that list. But the silicon providers have not gotten a ton of attention beyond just a select few. That's what we're going to walk you through on this presentation specifically. Let's start by looking at the actual architecture that NVIDIA is talking about when it's mobilizing these partners to update data center power systems.
So the top is the current architecture. VAC, is that volts alternating current?
Yep, that's correct.
Versus the bottom, which is 800 VDC or volt direct current. So they're switching between those two architectures. What's the benefit?
Well, in simple terms, you can go all the way back to the dawn of electricity and the initial build out of the electric grid. Basically, Edison versus Tesla. We're still hot and heavy in this battle. The alternating current is like what you use in your home, and that's what data centers use as well. But look at all of the different power conversions that have to happen, ultimately culminating in the rack and that power getting distributed to the chips themselves all the way on the right. NVIDIA thinks it can be made much more efficient if we make the switch to direct current there on the bottom. So fewer conversions if you run that higher voltage direct current all the way to the distribution and then split the distribution to the chips themselves, delivering more power the data center racks need, more current, more voltage getting delivered to the chips, and fewer conversions, less complexity, less power loss in the steps in between. So that is the pitch NVIDIA is making. Obviously, NVIDIA does not design power chips themselves. And so this is why they've tapped a bunch of partners to help them out with this. Obviously, NVIDIA is going to monetize this entire thing. NVIDIA has become much more than just a chip designer, a silicon provider itself. It wields control over the entire supply chain. So they'll monetize the whole thing. But what about the companies that can monetize the parts and pieces? That's what we want to look at here. Casey, nice chart. I like this one. What are we looking at here?
All right, we focused on the list of silicon providers. If you go back to this partner list that NVIDIA provided, At the bottom, there's those 3 bullet points: silicon providers, power system components, and then data center power systems. And we're primarily focusing on that top bullet point in this chart. And we have it broken up by region, vast majority based in the US, Alpha and Omega Semiconductor, Power Integrations, a couple that we haven't talked a ton about here at Chip Stock Investor, but are this new partner with NVIDIA, and then some very familiar names: ADI, Monolithic Power, Onsemi, Navitas, that's been on a run.
Solely based on this news.
Right. TI, Texas Instruments. And then on the right side, we have a couple companies based in Europe, ST Micro and Infineon. In Japan, Rome Semiconductor and Renesas. Little company in Taiwan that's listed on the second bullet point in that NVIDIA announcement under power system components, but they also do some semiconductors as well. And then finally, we have InnoScience, which is traded on the Hong Kong Exchange based in China.
We put this together for a couple of reasons. Let's talk about putting together a little basket of companies that might benefit from this. NVIDIA said it will begin rolling out initial high voltage data center systems in 2027. So it's now 2026. We're a year away from these systems beginning to get mobilized. What that means is some of these companies will begin ramping up production as soon as this year to fulfill those initial orders, which means it will start showing up in the financials of these companies this year. And because markets are forward looking, some of these stocks could start to move ahead of the systems actually getting installed in the data centers themselves. For example, Navitas, we just mentioned, been on a hot run in the last year. Based on this announcement alone, ironically, their revenue keeps declining. They're going pretty much all in and restructuring the business around this high voltage data center, gallium nitride and silicon carbide business. So you get the idea here. That's one that has already moved in a very dramatic fashion. And a lot of these other companies maybe not getting a lot of attention. This is a little precursor to how we've categorized these companies as well, which we'll show you here in just a moment.
This was about a month ago, December 2025, announcement from Onsemi and that company InnoScience based out of China regarding a collaboration. InnoScience does the wafer manufacturing, Onsemi, the IDM. So those two partnering up for gallium nitride.
That's notable. Onsemi, obviously, already well known in silicon carbide, also looking for an efficient way to now enter gallium nitride as well. So 2 companies on the list. Perhaps you have access to the Hong Kong exchange. You might have a preference for InnoScience. If you're in the US or have access to the US exchanges, maybe you would prefer Onsemi. You get exposure to what they're working on in gallium nitride if you just own one or the other. But important point in this press release that we should point out, notice the projected TAM, total addressable market for gallium nitride, is only 2.9 billion by 2030. So just bear that in mind with some of these companies that have really taken off early on high hopes for their early development of GaN and higher voltage chips. We're still talking about fairly small markets here if we're only looking at the high voltage applications or the high voltage silicon parts and pieces to this. Companies that have a broader exposure to the other silicon, traditional like IGBT type business, are going to have a much bigger TAM than the companies that are solely focused on GaN and SiC for the data center, like, for example, Navitas. But Onsemi in this game now via InnoScience.
And then what about this collaboration between ASE and Analog Devices?
Yeah, on the next slide, you'll see we have Analog Devices listed as a hybrid company. Traditionally, they are an IDM, but they have been right-sizing some of their manufacturing capacity. And one of the latest announcements they made on that front is they are selling one of their packaging facilities in Malaysia to ASE, which is based out of Singapore. Interesting to see Analog Devices still obviously an IDM, but a much more efficient IDM than your average one that's out there, and entering a market historically maybe they're not very well known for. Analog Devices is a leader in analog to digital processors or data converters, but now also participating in the data center power market as well, and right-sizing some of their fab capacity along the way.
All right, so let's take a look at our list here of tickers for those companies that we showed you on the previous chart. Have it broken up into IDMs versus fabless versus a hybrid like ADI, as well as a foundry company in the InnoScience.
You also have it broken up regionally. So IDMs there at the top. You probably already know within the IDMs, Onsemi is our holding from that basket. You might also like Texas Instruments, but remember, it's a broad-based business versus Onsemi, much more focused on just the high-end market, highest value semiconductors within power and sensors as well. The last ticker there is Alpha and Omega Semi, AOSL. I think it's been a couple of years since someone asked us about that. It's not one that we cover. One of those IDMs that is also broad-based, not the most efficient operating model. So within that basket, if we were going to pick a broader based IDM, Texas Instruments, kind of the big boring name, would be the way to go for a long-term buy and hold. But if the end market for industrial and power does pick up as we head into 2027, AOSL may be potentially one of those names that gets lift from the rising tide of the growth cycle. Operating margins maybe increase, and maybe the stock price does something really dramatic as well. So worth still considering if you're trying to build out like a basket of these companies, your own little personal ETF.
Do they have a good slogan like, we provide all semiconductors from alpha to omega?
I think that's basically what's going on with the name. Maybe an interesting little history lesson there.
I feel like I need to look into this. And then you've already talked about the hybrid analog devices, fabless companies. We have Monolithic Power in our portfolio. We've been beating the drum on that one for quite some time now. Navitas, you've called out some pretty serious issues with them in the past.
It's still a pre-revenue
Yeah.
business. They exited the consumer phone charger business because they were losing money. So going all in on this, if you look at the recent financials, the revenue just keeps going down. And so if you add this to the basket, a lot of hype is already priced in, market cap over 2 billion, and quarterly revenue in the last report was 11 million. So let's call it a pre-revenue startup for all intents and purposes. And it's a bet that they are going to gobble up a very large portion of the high voltage data center market share. But obviously the competition is going to be stiff.
What about power integration?
Another one that has struggled, even though it's fabless. The good news is they've remained profitable during the cycle downturn. A broad-based fabless designer, sort of like Alpha and Omega, except minus the fabs, obviously. But their main kind of bread and butter for power integrations is the consumer appliance market. So like kitchen appliances, washers and dryers, power chips for that. But they have a new gallium nitride product that they hope to get designed into NVIDIA's systems. So worth a call out, but another one that has struggled. Maybe it's really cheap if they hit a new growth cycle later this year.
And then if we shift to the European IDMs, ST Micro, Infineon, both have been affected very heavily because a lot of their chips are focused on the auto and industrial sector, right?
Yeah, especially Europe's automotive sector. ST Micro hit especially hard. Infineon has held up better. They've made a lot of acquisitions, especially of fabless companies that they can kind of plug into their remaining fabs. They're sort of like ADI. They're almost a bit of a hybrid these days as they've worked to right-size their manufacturing footprint. For example, they acquired the automotive connectivity business from Marvell last year. And also in tandem with that, they offloaded that fab to Skywater Technology in the US. So almost a hybrid, you could say, held up a bit better than ST Micro, but a big player, Infineon, in industrial power. That would be our preference there if we were going to pick one. But ST Micro, again, maybe another one of those businesses that if it hits a growth patch, maybe it's really cheap and the stock price can take off.
And then the Japanese IDMs, top one is Renesas, bottom one is Rome. We've called out Renesas a number of times in the recent past. What about Rome Semiconductors?
These are more broad-based power chip IDMs. They've struggled because of the automotive industry taking a hit. Industrial markets just having an excess of semiconductors and inventory. So two broad-based plays, Renaissance, you do get the added benefit of also being an EDA software player because of that acquisition a couple of years back now of Altium based in Australia.
All right. And then let's round it out with that InnoScience based out of China and then Light-On in Taiwan.
Nothing more to add, I guess, on that. InnoScience in China has the partnership with Onsemi on gallium nitride. Light-On, an interesting little company in Taiwan. Its stock has also shot higher as of late because of rising optimism for exactly what we're talking about here. Specifically, they have a lot of power chips, but there's also some networking and photonics module business that is an additional catalyst for the recent flight of the stock.
So let's talk about what this all means based on what's happening with these end markets and where we are in the current cycle.
This is an extension of the accelerated computing and AI infrastructure movement. But primarily that market, when we're talking about that, we're referring to GPU-based systems or custom accelerators like the Google, with the help of Broadcom, TPU business. So when we start talking about the upgrades needed for data centers and other computing infrastructure, while it is being spurred on by the top end market there on this chart, what we're actually really looking at is inventories, semiconductors in supply in inventory on the bottom row, auto and industrial chips. So that entered a new growth cycle the second half of 2025. It hasn't inflected to a really dramatic growth cycle yet, but NVIDIA's post-architecture that these companies will begin testing and building this year could be another reason for optimism, besides just the auto and industrial markets that we're typically talking about when we're referring to this end market. If you're looking to build out a basket of companies because you don't know which ones you should bet on for the coming growth cycle, there you go. It's funny how these things continue to get overlooked when everyone wants to talk about the power bottleneck, talking about the data center power modules and power system companies. And now we're on to the memory bottleneck. It's almost like people just
like
bottlenecks and just chasing bottlenecks and chasing momentum. But a lot of value to be found in these other companies. You are paying attention. You're ahead of the curve from what's going on out there in the market.